Okay, so let's move into the chart. So what's the first pair we are going to be deliberating on today? The first pair we're going to be deliberating on is the US oil. And what has happened on the US oil? Well, things has been moving fantastically well for us since the beginning of the week, as we've been able to scoop in about a minimum of about, let's see, a minimum of over 400 pips here, and we have multiple entries running on the US oil, so you definitely will be running in close to about 1,000 pips thereabout on the US oil. So let's quickly look at what our expectations were during the live session yesterday. And during the live session yesterday, where were we? All right, so during the last session yesterday, we saw our price has been consolidating right around the $89.50, and we had a couple of perspectives that we wanted to be looking out for. And because of the multiple rejection we saw at the $88 level in the last 24 hours prior to the live session yesterday, we were looking forward to how price is going to relate to the structure. So we had a scenario where we said that if price breaks above the $89 level, that is, we see a significant breakout of that structure, after which price retests the $89.50 or probably this bearish trend line, then we will be looking forward to taking advantage of that bullish momentum to the upside. And the other scenario was that if price breaks down the structure we identified on the lower time frame. Remember, we had this temporary bullish trend line on our 15 minutes time frame. Let me go back to the 15 minutes time frame. So here we have that temporary bullish trend line. We said if price breaks down that trend line and then does a retest of that structure, we want to be joining the decline to the downside, and that is exactly what happened as we finally saw the breakdown of that trend line, hereby pushing price to as far as how many pips that is. That was about over 300 pips during the course of yesterday's trading session. We saw that price move down, and it was close to our take profit target zone, which we said is around the key level at the $86 area. Well, some of you would have actually closed your trade at that point. And like I told you, we want to be seeing how participant is going to be relating to the structure. If the structure is going to be that level that will be inciting the second wave of the bullish momentum that started last week. So now, what did we see here? Let's see what has been happening in the last 24 hours. But first of all, I would like to scale up to the higher time frame for the sake of those who were not part of the session yesterday and probably the days before yesterday, so that they can actually have a look, a better perspective into what our expectations were and what we were looking out for before we made the decision we made at the beginning of the week. So the first thing I want to do here is to scale up to the higher time frame, and let's see what the structure we have on the daily time frame says. So on the daily time frame, the first thing we observed was that price has been on a very strong bullish momentum, and as a result of this, we were able to identify this bullish trend line after connecting the series of higher lows here, and that gave us that resultant bullish trend line that we have been using to guide our action for a couple of months now. However, when we zoom close into the structure and see what has been happening since the month of June, we can see that we have a bearish structure after connecting the series of lower highs here, and we can see how price has consistently respected that level, hereby resulting into lower lows and lower highs. And we can see that this move collapsed right back into the bullish trend line during the course of last month. We saw a couple of rejection before we saw the breakdown of that trend line, giving us a clue that there might be a bearish momentum coming in. However, the last week trading session saw price break out of that structure to the upside, turning this breakdown of the bullish trend line to be a false breakdown. So now, in addition to the structure we identified here, the other thing I was able to do was to identify a very significant level at the $86 area. And if we look into the past and see how this level has been, we can see how participants has used this level to determine price movement. If we go to as far as the I think later part of last year, we saw the rejection of this level. We saw the rejection of this 86 level. We saw the breakout during the early days of the month of February this year, and since then price has consistently respected that level. So last week we finally saw the breakout of that structure to signal that a bullish momentum is hereby coming in. And one thing about the bullish momentum we identified last week was more or less as a result of the OPEC Plus meeting last week, where a decision was made that they want to be cutting the oil production. So, and because of the oil production, definitely what do we expect? We expect that there will be a spike in price because there will be short of oil and the demand is going to rise, which will definitely result into a spike in price. So, since last week, we saw this impulsive move which came right back above the bullish trend line, break above the bearish trend line as well, and also the key level at the $86 level, hereby rising to as far as the $93 area. And what does this tell us about this current structure? Well, one thing significant about this area was the breakout of the structure. We can see how that level has been, price broke out of the key level at $86 level, broke out of the bearish trend line and climbed right above that bullish trend line now as well, making that area an area to focus on. So since the breakout of that structure that we have here, from a technical standpoint, whenever we cite a breakout of structure, what do we expect? We expect that price is likely going to come back and do a retest of the structure in such a way that price will be forming patterns on lower time frame that will be supporting a trend continuation to the upside. And since then, we have seen since the beginning of the week, after price has tested the $93 level around here, we have been enjoying this bearish momentum to the downside. And one thing I want to tell you about this bearish momentum is that this bearish momentum is likely going to be a retracement of this previous impulse leg that we saw here. But one thing that we don't know about this current structure is that we don't know how far this bearish momentum is going to go. Is it going to get back to the structure that was broken last week before we start seeing that bullish momentum to the upside? Or is it going to respect that key level at the $86 level one more time, or the bullish trend line here, after which we look out for patterns on lower time frame to join the rally to the upside? So these are the things we were looking forward to for this week. So we scaled down to a much lower time frame to begin to see things more clearly. And one thing we observed on the 4 hours time frame was that as soon as price tested the $93 level, which was here last week, we have seen that since the beginning of the week, price was caught within a consolidation phase right between the $91.50 area and the $93.50 level. And what we said at the beginning of the week was that we want to be waiting for a signal to happen, and the signal is likely going to come either in the form of a breakout of this channel to give us a signal that the bullish continuation pattern is coming in, or probably we're going to be having a breakdown retest of the structure to join the decline to the downside. But lo and behold, the breakdown of that channel was what happened, and that incited the opportunity to join a trend continuation to the downside. So since the beginning of the week, we have continued to sell the US oil, looking at the current structure that we have here. So, and as we have taken the sell opportunity on the US oil here, we have our take profit target sitting right around the $86 level, which I shared with you was a very significant level on the higher time frame. Remember, I showed you how important that key level was on the higher time frame and how it has been determining how price action is going to move since the later part of last year. So we want to see how price action is going to relate to the structure. Are we going to be having a situation where once price gets into this level, we'll continue to see a consolidation phase of multiple rejection of this area that will be giving us a clue that buyers have come in here and participants in this market have seen this level cheap enough to buy the US oil, and a breakout retest of structure on lower time frame will be sending price go to the upside. That is the first scenario. And then the second scenario is probably we could be having a breakdown of the structure, after which a retest will be sending price going to the downside. So at this point, we don't know how price is going to relate to that level, so we need to cross our fingers and wait. But in the meantime, we have our take profit target around the $86 level. And if we look at what happened during the New York session yesterday, we saw that price was close to the take profit target that we chose. So simply, it's more or less an area around the $86 level. So what I said yesterday was that we should be having our take profit target around that area. So some people would have closed. I think I have some couple of people who contacted me and told me that they've closed their trade at that point. Well, if you have closed that trade at that point, well, it's okay. You must have had quite a lot of pips to call your own as at the end of the New York session yesterday. But however, what has been happening in the last 24 hours? Well, after this impulsive move that we took advantage of yesterday, I think we took about 300 pips thereabouts on this move to the downside here. What has happened since the later part of the New York session was that we started seeing a situation where price appears to be doing a retracement of that impulsive move. And since then, price has been caught within a consolidation phase right around the $88 and the $87 area since yesterday. And what did we see? Price came back to do a retest of the $88 level. And remember how important that $88 level has been. Well, let me quickly share with you what this current structure looks like. Well, the first thing we observed on the current structure was that we had this bearish trend line, and we have this temporary bearish trend line. And as we can see, since price broke down that bearish trend line on Monday, we have seen that price has continued to respect that bearish trend line, hereby emphasizing the strength of the sellers at this point. So we saw that happen yesterday as well. Price respected that bearish trend line to push price to the downside. Now, look at the structure also. Remember, we had the structure identified yesterday where we've been seeing rejection of that level by the buyers, where we were thinking probably if a breakout of this area happens, or breakout of this bearish trend line, we might be looking forward to a bullish momentum, but that did not happen. Price respected, and then we saw the breakdown of the $88 level. And from a technical standpoint, whenever we cite a breakdown of a structure like this, what do we expect? Yes, we expect that price is likely going to come back and do a retest of that structure in such a way that we will be having a trend continuation to the downside after citing multiple rejection of this area, or probably evolving into a reversal pattern that will be giving us a situation to sell the US oil one more time. And if we look at the structure at the $88 level here, we can see how that level also lines up with the bearish trend line that we identified here. So we have three parameters around this area. We have the bearish trend line. We also have the structure that's been holding bullish expectation in the last 24 to 48 hours, and then price comes back into that area and rejects that area. If we scale down to the 15 minutes time frame, we will see that we had multiple rejection of that level. Hold on a second, let me scale down to the 15 minutes time frame. So you can what happened here, you can see how that level was rejected a couple of times, in fact multiple times here during the early hours of today before we started seeing that structure. So what I did at that point when I cited that was to join the decline from that area. So I've already had another position running from this point, and let's see how this move is going to happen. So if you are taking advantage of that move right from this area, well, kudos to you for being on standby to take advantage of that move, as you will currently be in about let's say, is it about 87 pips, 75 pips thereabout, which is not bad. So let's see how price action plays out. So since the beginning of the week, we have been enjoying this bearish momentum. We took this first one, we took the second one here, we took the third one around this area, we took the fourth one yesterday, and it appears we're having a fifth one at this point. So we have multiple entries on the US oil for this week, and our take profit target still remains around the $86 level. So let's see if price is going to get to that point before we'll now start looking at how the structure is going to be like. Like I said, we have two expectations right at the $86 area. We could be having multiple rejection of that level to send price go to the upside, breaking out of that bearish trend line that we have here, a retest of structure confirming that the second wave of the bullish momentum that started last week. Remember, we had this bullish momentum that started last week around this area. So we had this bullish move last week. Price comes back. We don't know if this is going to be where price will be inciting the second wave of that bullish momentum. So let's wait and see for how price is going to relate to that level. And then if price breaks down that level, then that will probably give us a bearish signal. But remember, we are not getting too excited when price breaks down the $86 level, as a retest of structure will be giving us confirmation to add more position to our existing trade. So let's see what happens afterwards as we head into the New York session. The bearish trend line here continues to be our guide going forward. Now remember, we are on a very strong bullish momentum at this point, so let us look at the second scenario that is likely going to be happening around the $88 level here. So if you are taking advantage of this $88 move at the beginning of the UK session today, well, I would be advising you that you should move your stop loss to break even at this point. All your stop loss, if you still have open position since Monday, you want to move all your stop loss to somewhere right above the $88 level. And the reason why we are moving our stop loss to around the $88 level is simply because of how important this level is. So why is it so important? Well, I shared with you earlier that this level also shares a confluence with that bearish trend line. So there is a possibility that price might break out of that trend line. And if we have a breakout of that trend line, which also shares a confluence with the $88 level, then we might be seeing this as a bullish signal. And remember, we are not getting too excited when we sight a signal like this. We want to wait for further confirmations to happen, either in the form of a retest of the $88 level or probably the bearish trend line one more time before we start looking out for patterns on lower time frame to join the rally to the upside. And if this happens, then we might be seeing this as the second wave of that bullish momentum that started last week. So this is my expectation on the US oil for today. If you have any questions whatsoever regarding what I've discussed so far, feel free to drop in your inquiries in the comment section, and let's see how I can be of help to make things more simpler for you to understand.